He's one of India's most seasoned institutional bankers, a Citi man for nearly 3 decades now, with stints spanning transaction banking, corporate banking, cross-border finance across Asia. Balasubramanian now steps into one of the most consequential roles in Indian banking. India's CEO and banking head and Indian subcontinent subcluster head at Citi. Taking charge at a time when the India growth story is being stress-tested by a turbulent global macro, cautious FII flows, and questions about the pace of the capex cycle itself. Post its historic exit from the consumer business, Citi is now a pure-play institutional franchise here in the country. Leaner, sharper, and a laser focused on corporate investment banking, treasury, trade, and markets. So what does that mean for ambition, for competition, and for India's place in Citi's global priorities? Balasubramanian, welcome to the interview. Thank you so much for your time today. I have to firstly talk about the India growth story. From the perch where you are at Citi, what's it looking like? Does it look like it's a structural issue that we're in? Or does it look like a passing phase because of the geopolitical tensions?
First of all, thank you, Aisha, for having me in your studio. And the wonderful introduction that you gave about me. See, I think we are going through a very interesting phase, not only for India, but across most of the markets, be it developed or emerging. And if I look at India versus, what the investors are looking at and what our corporates are telling us, I think there are many good factors that, play for India. Of course, the near-term uncertainty in terms of, the global events that has impacted us is something that is a bit of a bother. But on balance, if I have to look at the positives that is weighing for India versus the near-term shocks that, we are going through, there is still a lot of money which is waiting to come into the country, both on the portfolio investment side as well as on the FDI, which is the manufacturing side. And the primary reason why I'm quite bullish about this is because, one, there are not too many countries which potentially can give a market which is as big as India, quite a resilient market. So that's a big draw for investors across sectors. The second thing, which again is super positive, is the fact that we have a government which is in its third term. So consistency is something that is very critical as you're looking at investing from a long-term sense. And I think India, thankfully, is one oasis in a desert where consistency is something that, is very positive. Predictability, again, has been pretty positive is what I would say, which again is a big factor when investors are looking to come into the country. And the last thing is the government has been very proactive in terms of trying to improve the ease of doing business as well as opening up avenues where investors could be interested in putting money in. So combination of all these things basically ensures that, the positives more outweigh the negatives. The negatives, of course, is the global uncertainty has been consistent in the last, I think, 18, 24 months. Last year was tariff, then year before was Ukraine war. This year is the Middle East crisis that, we are going through. So the good thing is, despite all these headwinds that, come and hit our economy, we continue to be growing at around about 7.5%. And for a large economy with a base of around close to $4 trillion, there are not too many economies that is there. And therefore, even if the investors are a little worried, and when I talk about investors, both I'm talking about the FDI and the FI investors, you just can't miss the opportunity that India provides.
What's the biggest threat, though? You've given me almost a pretty much SWOT analysis, but let's talk about the threat as well.
I think the balance of payment is something that, we are very, very focused on. Because if you look at the balance of payment situation for the last few quarters, unfortunately, it's been a little bit on the negative side. And that has impacted rupee in the last at least 12 months. I think our currency has been probably one of the more weakest currency compared to most of the other Asian markets. And that continues to be something that, is bothering investors. Especially if you're putting money from outside India, you look at a dollar return or you look at a foreign currency return. And if your currency is depreciating and the market has been a little muted, that's like a double whammy from an investor perspective. So I think that is one. The second thing is, for the first time in the last several years, we've actually seen a high single-digit corporate performance because the nominal GDP was under 10%. But thankfully, that is going to be behind us because, we are seeing some tailwind that is coming into the corporate performance. And with inflation also picking up, I believe that, as I look at the next 12 months, we potentially will have early teens in terms of like, the overall performance outlook. So I think these are the two factors that we need to think about in terms of like, how the near-term impact will actually play out for the country.
But when you just isolate the currency weakness, would you say that it's the local demand factors at play, or is it more because we're pegged against the dollar, and the dollar, irrespective of its volatility the last year and a half, still weakens the rupee?
See, I think if you think about the local demand, the government has done a lot of positive steps.
Sure.
The GST rationalization that happened in late Q3, early Q4 actually gave us a very, very strong tailwind in terms of like, the demand pickup. The tax rationalization that happened in early part of 2025 is still a big positive that is playing out. And again, with a 1.4 billion population and majority at around, average ages at around 28, 29, it is a consuming population. So like, there is going to be enough and more consumption that is going to play in the country. So on the rupee side, if you think about it, things are all fine. The moment you start converting it into dollar side, that's where I think the problem comes in, because like, we saw the rupee moving from 83 all the way to 95, and currently it's around a little over 93, right? So that basically takes a little bit of sheen away from the growth that, we are talking about.
So is 90 plus the new normal for the currency? Should we assume that?
That's a good question. That's a good question. I think RBI is very, very clearly focused. I don't think that, they are trying to manage the rupee, but they're trying to see in terms of like, why the currency has seen such a sharp depreciation. We saw some regulations that came in late part of March. And then there were some positive things that happened in the last 24 hours. So at this point in time, I think looks like 93 is the level that, we are focused on. But then like, assuming things start improving in terms of like, the FI money coming back into the country, there is some positivity on tariffs, because clearly I think we have done a phenomenal stuff on the India-EU trade deal. I was actually in Delhi last week, and we spoke to some of the policy makers. We are very excited about like, the opportunity and the runway that we have on the India-EU side. Similar is the case with India-UK. The expectation is that, the India-US trade deal should happen anytime in the near future. And combination of these three things will ensure that, the opportunities in terms of like, Indians looking at exporting stuff is only going to increase. And that is actually going to create a positive environment for the country. Yeah.
But the point that you were making, Bala, I mean, FIIs have been net sellers to India now for more than a year, and quantums as large as we've not seen in our history ever. Is that going to continue? Purely because of the relative outperformance of other emerging markets and even developed markets?
See, at the end of the day, FIs are basically looking at returns, right? They don't have too much of association to any particular country because they have to make the money work.
Yeah.
India, for a variety of reasons that we spoke about in the last 12 months, was not the top pick from an investment perspective. But then if I look at the tailwinds that is coming in terms of like, the tariff regulations coming into play, the second thing is the local consumption continue to be a big positive driver, and the corporate performance is starting to improve. It's only a question of time before like, the money will start again flowing back to the country. Some of the money that moved out of India basically went into some of the other emerging markets in Asia. And if you look at the return on a relative basis in the last couple of quarters versus what it was 12 months back, I think that has started to moderate, which means that, there is going to be reallocation of portfolio that will happen, and India potentially will start seeing to get the benefit. When it is going to happen, our view is that, it's probably sometime in 2026, but we have to wait and see in terms of like, how that plays out.
So you're still saying that the FI reversal is more of a cyclical story and not a structural issue?
Absolutely not, because like, fundamentally for the reasons that I started talking to you about, nothing has changed, right? It is only that, short-term hiccups which resulted in money moving out of the country, but I think it is a question of time before it starts coming back.
But Bala, you in your conversations do speak and advise a lot of these FPI investors as well. When they talk about India, what are the three signals that they're waiting for?
I think corporate performance is something that, they're super focused on. We saw a pretty decent December quarter performance. We are still waiting to see in terms of like, how the March quarter numbers are going to come out. The initial indicators show that, even the March quarter traditionally is a very, very strong quarter for India because of the financial year end. Should be a good quarter. So I think that is going to be a big positive. The second thing is in terms of like, the government views in terms of like, how they are helping the economy. And as I said, that government has been super supportive in terms of trying to ensure that there is enough and more interest in sectors across the economy. So that again is the second thing. And the third thing is the macro environment, right? With everything that is happening globally, if you have to look at one place of stability, which is still, I would say India is right up there, because Europe is going through its own churn. Middle East, unfortunately, is going through a war. I don't know how long that's going to take. US, we are getting into the midterm, so it's a question of time before how that changes. So considering all this backdrop, if you put India versus some of the other factors or markets, I think India should start seeing flows coming back.
When I just look at the texture of the listed pool here in India, Bala, what is the sense that you're getting? I mean, of course, the index weightage aside, but in your conversations, where is it that you see structural stories getting built in India, which is getting reimagined as we speak?
I think the digital story in India is very, very strong. The financialization of savings that is happening in the country is very, very strong. The third thing is India is no more restricted to the top 10, 15, 20 cities. It is much, much more broader. There are activities that is happening in places which hitherto you wouldn't have even talked about it. The number of airports that is actually getting constructed in tier 2 and tier 3 and tier 4 cities in India, that basically will mean that the pressure on some of the big cities is actually going to reduce over the next 5, 7, 10 years' time. And there is going to be more and more availability of opportunity across India. Now, if I take an example of what is happening in consulting firms and what's happening in IT companies, today a large part of the workforce is not going to be in the top 10 cities in India. They're actually getting into some of those newer places like Orissa, some parts of southern India, not the traditional Chennai, Bombay, Hyderabad, etc., but some of the other places where the quality of talent is equally good. Attrition rates are much lower. The cost is much cheaper. And people have an option of staying with family instead of moving away from family. That means that the pull factor for these companies to go into those markets is only increasing. So at the moment some of these companies go into those markets, imagine the consumption theme that is actually going to start driving in those places. And then the affordability index, et cetera, will all start improving, which means that the growth is going to be more structural and more diversified rather than concentrated in few pockets.
But in the very near term, Bala, the whole affordability factor, and at some point, maybe the high oil prices will be, passed on to consumers. That inflation hit, do you think the consumption sector will be able to absorb? Because there's only that much they'll be able to pass through without worrying about volumes.
So internally, I think our economist in Citi basically is thinking about a potential uptick in the inflation rate. Assuming that at some point in time the government will start passing on some bit of the increase in crude price to the pump level. So I think that will mean that maybe at least another 60 to 75 basis points increase in inflation is quite possible, right? So that is one. The second thing is India actually has done a good job in the last few months as we ran into this Middle Eastern conflict by diversifying our supply sources. Instead of too fragmented and too concentrated on certain countries for our supplies. Again, these are long-term trends. These will take time. And as long as you're able to identify new sources of our supplies, that ensures that despite some of these hiccups that we are facing, that will ensure that the supply source doesn't get drained out. So inflation, I would expect that there is a potential possibility of uptick. We do not expect too negative impact on growth. Maybe a 25 to 50 basis points cut in growth could be possible, assuming this continues for a longer period of time. But at least the good thing is if you see the last 7-10 days, both the parties are looking at finding a solution. Now, if that happens, then things will potentially not impact India in any much negative way.
Bala, before we had the war to deal with, the world was obsessed about AI and the kind of capex that the Mag 7 were investing in. And that was the anti-AI trade as well. The anti-AI trade was India for quite some time right now. How do you see that piece playing out? And where do you think India is right now in the investment cycle when it comes to the AI stack?
I think one thing that most corporate India and across sectors have realized is AI is something that they have to adapt and ensure that, how they can actually use it in their regular businesses. So there's a lot of work that is happening on AI across industries. And if you look at IT, which is actually in the forefront of this revolution
Yeah.
and change that is happening, at least every company is looking at either developing organic skill set to build on AI or looking at opportunities to grow inorganically on the AI front. And we engage with several of these companies on a regular basis, getting our global industry experts to talk to them in terms of opportunities and available outcomes that they can look at. There is a lot of work that is happening on that front.
And where else in the entire AI stack do you see investments coming in? IT services, of course, is just one part of it.
Manufacturing, there is going to be a lot of stuff that is happening. That's right. Then there is going to be a lot of AI activity that is going to be there on financial services for sure. And I can talk about our own example because our global CEO, Jane, is super focused in terms of trying to retune the firm to the AI model. There is a lot of AI tools that have been rolled out in Citi across the world. And in India, we have a service center which basically supports 60 countries out of India. 70% of our employees in that service center, and that number is 35,000 people, they are AI trained. And there are a lot of these guys who are basically carrying patents in terms of products and processes that they have developed, which is actually being used in live situations, both on predictive as well as in genetic AI.
Bala, Citi has now completed the exit from consumer banking in India completely. In hindsight, was that the right call?
See, I think we were very clear that, we need to basically invest in businesses where we have a very good chance of being in the top 3 over a reasonable period of time. And if you look at consumer business in that lens, frankly, we didn't have too much of option on that front. And again, when CEO took over her role, she took an objective view of the businesses across the world and identified businesses where we will be a long-term winner. And I think the institutional businesses were we have a very, very strong base, and we have the ability to even go bigger from where we are today. And it's, as you rightly said, it's 2 years since, it's 3 years since our consumer exit happened in 2023. Our 26 numbers are still not out, but I can talk about the 25 numbers. As of 2025, if you look at our balance sheet, that is actually 25% higher than the combined consumer and institutional balance sheet that we had as of 2023. If you look at my asset book, that has actually grown by around close to 35%. If you look at my deposit, that again has been growing at around 35%. And then if you come to the P&L, on the top line, we have grown by 30% versus the combined consumer and institutional book that we had. And then our profitability is actually 35% more than what it was in the past. So overall, we actually have doubled down our investment into each aspect of our institutional business. And if I have to look at several segments that we operate in, on the market side, we have 14% market share on the FX that flows through our platform on a daily basis. That basically provides us the ability to be super sharp in terms of providing rates to our clients, both on the buy and the sell side. We are investing heavily on rates, we are investing on credit, we are investing on commodities. And so that's a big focus on the market side of the business. On the transaction banking side, the services business that we call, we manage something like 8% of trade flows in the country. And that's been growing quite nicely. We manage 4% of the digital flows that happen in the country. Tremendous amount of investment that we are doing. And the investment banking is a crown jewel where we are number 1 on the M&A side, and we are number 2 on the ECM side consistently for the last few years.
But when you do observe the consumer banking business per se, which is heavily consolidated now, the PSUs aren't what they used to be even 3 years back. They themselves are sort of very, very big players. How do you see that roadmap in the country headed?
See, I think the Indian retail is still going to be an interesting opportunity for the private banks as well as the public sector banks. And I think India is going to be more like a phygital model where you will still continue to have physical branches, and then you overlay the digital aspects on top of that. And with the average population at around 28, 29 years of age, there is always going to be demand for retail credit. There is going to be demand for digital products. There's going to be demand for credit cards, etc. And if you look at the penetration of India compared to some of the other markets, I think we still have a very long runway. So the story on retail is still going to be very, very interesting, but it's going to be more a domestic play.
You were earlier talking about, in your conversations with FIIs and FPIs, that earnings, of course, is another very big factor. If I were to ask you in the next 1 year, where do you see the maximum profit pool getting created?
I think the good thing, Shah, is that, if you look at the corporate balance sheet as well as the bank's balance sheet, I can tell you that, they're probably the best in the last 3 decades that, I can think about. And this is all the hard work that the government did in 2015 to 2018-19 period, which ensured that the relative position of both corporates and the banks are probably the best that India has ever seen. So, and most of these corporates are basically looking at avenues for growth, and those avenues could be either domestic or it could be offshore. We are seeing a lot of activity happening on the pharmaceutical sides, especially, where companies are basically looking at assets in different parts of the world. And that's going to be a continuing theme that is going to play. And we are involved in several of those conversations and discussions. The second industry that I will talk about is autocomp. I think increasingly, the demand is to look at distributed model. There again, there is a lot of investments happening where Indian companies are basically looking at opportunities outside India, either for organic or inorganic growth. So that's a continuing theme that is going to play. IT, we talked about it, AI is going to be a big driver. There will be opportunities for bolt-on acquisitions in different parts of the world, and Indian companies are basically looking at that as well. So you will start seeing a lot of outbound acquisition happening from India. And in fact, the recent guidelines that RBI came in, where they allowed the domestic banks to also participate in acquisition financing, that basically means that, the pool of capital that is going to be available, as well as the cost of liquidity that is going to be available, is going to be much better than otherwise what was available. So that basically will further provide a pivot to some of these companies to look at opportunities for growth. And domestic opportunities continue to be pretty strong with the large consumer base that we are talking about.
So you're saying a brighter next 1 year?
I would think so. You will start seeing some of those deals getting announced. The capital market, again, if you look at Indian capital markets, it's normally a back-ended capital market because majority of capital raising on the equity side happens between, say, September all the way into December. And if I look at the pipeline that we have, as well as what the street has, I think the size of the transactions that we are going to see in 2026 is going to be much, much larger than what we've ever seen. And with some bit of tailwind coming in and some bit of the clarity emerging on the current situation, we strongly believe that come Q3 and all the way into Q4, we are going to be quite busy in terms of the opportunity for the capital markets.
On that note, Bala, thank you for your time. Great speaking with you, and here's to a positive rest of 2026. That's all that one can say right now.
Thank you, Aisha, for having me.
Thank you.
Yeah.